Hey, what's up everyone? This is Trader Tim from EminiMind, and we're doing a Monday market analysis video. It's August 1st, 2022, and wanted to run through a handful of um, kind of important levels that we're hitting and talk about the week ahead. So, looking at the ES on the daily chart for starters here, if we come down to kind of coming off of our lows, we had pulled back to the 50% retracement and bounced off of the 61.8 multiple times. We actually broke through it and then came up and closed above the 61.8 three times, and then a fourth time, and then the fifth time kind of started the uh, following day. The gap up at lows on the 15th kind of started this most recent rally. And so I left this 50% up because we didn't get a close below the 61.8. Anytime on the daily chart that I'm looking on the daily ES, I want to see a close outside of a 61.8 to have more weight on sort of signaling the failure versus just breaking through and then closing back, in this case, since it's a long above the 61.8. Then with that 50% being in play, we've gone now beyond the negative 23 all the way to the negative 61.8, which kind of lines up with this retracement from back on end of March down to lows. Now, it's not the all-time high to low. If we draw that up, you can see it's just a little bit higher, like so, closer to that 4,200 level. This one's at 4135. So, um, still some room certainly to go higher, especially with all of the recession talks in the media. When the masses and the media are all talking about a bull market, it's usually time to sell, and when they're talking about recession, it's typically time to buy. So no real surprise here that we've been rallying, and that's a good reason why you don't sell your portfolio down at lows when you're getting scared. If you are scared or you are concerned about the markets going down, my take is to buy puts. That's what I prefer to do as opposed to selling out of my entire portfolio. And then let's say you sell out down here at 3,700. Oh, market's going to keep going down. And then you're sitting in cash, market goes up, and you just missed all those gains. Whereas if you just buy some puts, you can, close them out if they go against you, and you take a little bit of a loss, consider it some insurance, but then you have all of the benefit of, your long-term position that you've been building. So that's kind of outside of the trading realm. For those that are, most of you here are, actively day trading or at least swing trading. And so let's talk about a couple of things going on today in the ES. But to wrap up the daily chart here, I would look for some sort of a pullback since we're at the negative 61.8 and this 41.35 larger 50% retracement. Even if it's just a pullback to 4,000 or like 40.23 or the 4,000 level, that's the negative 23.6. You could draw an extension highs to highs, something like that, to give you something around 4,000 to 40.50. Might be a little bit of a pullback, but at this point, most folks have been caught off guard, and the masses have already dumped their retirement accounts and are bracing for the bottom to fall out of the markets. And what does it do? It's ripping without them involved in the market. So that's typically how it goes. Let's go to the intraday chart here on the ES, and I just wanted to talk about the 15-minute breakout from today. It broke above the first, so this is the first 15-minute candle here. We broke above and then went like almost 12 points, and I moved my stop to +4, and then we had this spike right back down to the actual entry price, 19 and a quarter. So I got taken out at +4. It came all the way back down and then went straight back up and made this kind of V reversal here. So really the only way to stay in and catch a +20 on that would be to leave your stop at -4. Otherwise, yeah, with this kind of awkward spike down and spike back up, a big stop run on that trade. But still, coming away with a winner. Last week I really didn't have a whole lot. I didn't do a trade recap video because I didn't end up with many trades or any trades really. Retracements wise, had the Fed meeting in there, and then I couldn't trade on Tuesday morning, so ended up just being a quiet week. But as we head into this week, now that the Fed meeting is behind us from last week, we should be able to get some, hopefully, better opportunities. The one caveat here is the month of August, for whatever reason, tends to be a little bit wonky. Um, and so I always tend to tread a little bit lightly this last month of summer, if you will, and then as we get into September, that's when I really kind of ramp things up. Usually it's the Fed meeting announcement in September that kicks off the fall of kind of the fall block of trading. And that takes us into the Christmas holiday into December. So no need to get overly zealous here in the month of August. You have folks kind of wrapping up their summer vacations, and then the kids going back to school, and so tend to be a lot of kind of more gaps and broken up weeks with different things going on. And so, yeah, just be careful the month of August and position yourself, for lots of opportunities to come over the next couple of months. And so if you can just get through the month of August, practicing your execution, really making sure that your trading plan is clear and dialed and you know what you're looking for. If August is kind of a awkward month, just don't worry about it. If we take a look at the VIX, we can see that we've broken down below the swing low here from the 22nd, and we are really getting into uh, low volatility numbers. And so if we get a bit of a sell-off on the S&P, I would expect the VIX to jump back up into like the upper 20s. So if we get a move down here at the 50%, but the VIX doesn't spike, then it's probably not going to be a sustaining move. It's just going to be a little bit of a pullback, and next thing you know, we'll be coming up and breaking the 61.8 and ripping higher, and then everyone's going to be saying, oh, how could this be happening, and the Fed, yada yada yada. So yeah, lots of stuff to be kind of paying attention to over the month of August, but if things are a little bit wonky, don't worry about it. For the last 15 years, for whatever reason, August has been kind of a strange month. The last thing I wanted to mention is crude, because crude has definitely pulled back off of these highs. It's a little bit hard to see here. I'll go to the weekly chart. So pulled back off of its highs, not a true double top, but kind of if we look at where the bodies closed here, or the bodies opened and then closed. But the more important thing is we've got a swing high at about 102 and a swing low, we'll just call it 90.50. So if we go back to the daily chart, we were kind of in this series of lower highs and lower lows, and then we broke the swing high here. So lower high, lower low, coming down, kind of a down trend line like this. Lower high, lower low, lower high, lower low, lower high. You get the idea, coming down, and then boom, we spiked here, broke this swing high, and so you'd think, oh, okay, we're starting a new uptrend. But then we came down, and we have now since broken this little swing low, and so the major swing low down here at 90.50 would be one to watch, along with the 102. So whichever direction we break there, should see some continuation in that direction. If we rally here and break up, we should be able to rip up to 110 pretty quickly. If we break down, then we should be able to move down well below 90 fairly quickly. But lots of trade kind of above this level, and so we're kind of right at the bottom of the kind of spring summer consolidation, if you will, and kind of a interesting time to be watching crude, because we're at that sort of inflection point. So that's another one that I'm paying attention to. Bitcoin and ETH also kind of getting a bounce off their 50% and working their way up to the 50% short. And Again, everyone who's dumped their Bitcoin below 20,000, now wishing they hadn't, but the 20,000 level kind of being a pivotal point, if you will, kind of that prior top from many years ago, and kind of a big round number. So, um, yeah, again, not surprised to see a bounce here after you get a lot of selling, and then there's less people that are interested to sell after that point, and so when buyers come in, there's a lot less pressure to push the market down, and so then it has an easier time going up. Market always moves with the fewest participants involved. So like in the ES here, the last couple of days we've had these big run ups. Well, if you look here at the volume, it's not um, a major change, but um, on these run ups, compared to like some of the selling that we had here with these bigger volume days, if I just kind of put my cursor up here and even back here, some of the bigger volume days compared to these run-ups, a little bit lighter volume on these moves up versus the selling on the move down. So um, yeah, just some things to watch for the week. And if you have questions or you want to anything chart related, feel free to drop a note in the comments below and I'll take a look at that. Hope everyone has a great week. Tomorrow morning we'll be doing a live trading session. You can check that out at eminimind.com/VIP. Thanks everyone, and we'll talk to you soon.